Good evening, everyone. I'm Christos, and today we'll explore the exact steps we should take if we believe a market downturn is coming. Meanwhile, while the doomsayers have stayed out of the market this year, the S&P 500 has already seen an impressive plus 15% gain, and we're only halfway through the year. Christos, a recession is coming. Christos, we're doomed. Christos, the stock market will collapse. It's natural to fear market downturns. It's instinctive. I know, I get it. I've been there, but are they really as disastrous as some like to claim? And ultimately, what can we do to manage them effectively? Ideally, we want not just to avoid losses, but to come out ahead. Is it possible? Yes, it is. Let's dive into the details together. Before we move forward, if my videos have helped you to get your finances in order and you want to start investing successfully, you can set up your investing account via the links in the description. This way, you can make sure that you're using a reliable platform and you'll be also supporting this channel directly without any expenses. Plus, don't forget to give this video a like and leave a comment. It really helps out with the YouTube algorithm. Of course, if you haven't done it already, subscribe to the channel and hit the bell icon to be notified when I upload videos. In order to be on the same page, let's get the standard disclaimer out of the way. I am not an investment or legal advisor. All opinions expressed in this video and on this channel in general are solely my own. They are meant to entertain you. Do not take investment or legal advice from a person on the internet. Always do your own research. The truth is, when markets rise, everything feels great and we all sail on a sea of happiness. But when the plunge begins, that's when challenges arise. To endure, you need one or both of these. A strong stomach, a solid strategy, and no, I won't just talk about DCA. When as novice investors, we see markets fall for the first time, it's natural to think, should I sell everything? I've lost all my money, haven't I? What a mistake it was to get involved, and so on. Again, it's natural. We've all been through this phase. The good news is there is a way to navigate the market's turbulence. Yes, even the most severe ones. So let's see what we can do in case we believe an economic disaster is looming. Not only how to prepare, but also what to do if caught off guard. And let's not forget, our goal is to come out on top. As we said, the first thing that comes to mind when we see red is to sell everything before they drop further, right? I hear predictions. What do you think I'll say? Selling our stocks in a panic is the worst thing we can do. Because most likely we'll sell after it has already dropped significantly and buy back when it's too late. Look at this screenshot from the 1990 crash. Minus 20%. Terrifying. At what point do you think you would have sold? And when you saw 2 or 3 times green, what would you do? You would buy back. And with the next reds, which would be redder than ever. And when would you know that the issue has been overcome and we're back to normal? Believe me, pal, you would mess it up. Both you and I and all of us, really. And in the end, do you know what that was at a top-level perspective? It was this. 1. Nothing. If we tried to predict when to buy or sell back then, we would have lost money for no reason. So what should we do, Chris? I hear you asking? And I answer, if we are in the preparation phase. Meaning we believe a market crash is coming for some specific and measurable reasons, not just because we read so. Then it's worth reviewing our portfolio closely and considering the possibility of diversifying it slightly. And no, I'm not going to talk about bonds. I don't like them at all, especially for beginner investors who are looking at their interim price change. We can, however, shift a portion of our capital to safer positions. I'm talking about cash, but not just letting it sit in the bank. So, to put it into practice, if we believe a market downturn is coming and we want to safeguard ourselves, the best action is to lock some of our capital into term deposits with good returns. And of course, I'm talking about the term deposits offered by Freedom24, which provide a fixed interest rate up to 5.85% and a duration up to 12 months. I won't go into detail about all available options. You can find all of them here, but I'll also leave this little table here for anyone who wants to take a look. With these term deposits, we can secure a good return on our money while waiting for the markets to fall. And since we definitely don't know exactly when they will fall, we can just put our money in 3-month term deposits, collect the interest, and reassess if the markets have dropped sufficiently and we want to re-enter aggressively. Otherwise, we simply renew for another 3 months in 5 easy steps. If we're on a computer, we go to Member Area, Long-Term Money Placement, choose the package we want, select the currency, deposit amount, click Confirm, and there you have it. And on mobile, click Menu, Non-Trading Order, select Long-Term Placement of Money. Choose currency and plan, confirm, and we're all set. And as if that wasn't enough, until July 20th, there's an additional offer from Freedom24 with an excellent deposit bonus. Specifically for deposits from €5,000 to €19,999, we receive 3 free shares. For deposits ranging from €20,000 to €49,999, we receive 10 bonus shares, and for deposits of €50,000 and above, we receive 20 shares. Here we can find the complete list of shares we can earn. Yes, there are shares worth $3, $4, $5, but these exist too. And see how we redeem these shares here. There will be a link in the description. So don't waste time, we said, until the 20th of July. Now, of course, the question arises, what if I'm not prepared? What if the downturn comes and I haven't managed to do anything? Then, just be glad you have the best investment strategy. I'm referring, of course, to DCA. That is, depositing as much money as we can every month, regardless of market movements. Think about it, even in the above example. If we kept buying every month, it means we would be buying here and here and here and here. In this way, we essentially buy randomly at all prices, some high, some low, and as we said, in the long run, we come out ahead, and we must firmly understand that downturns will always come. Always. We don't know when, but it's certain that at some point it will. We said, it's part of the cycle. If we see it coming and want to prepare, we lock part of our investment capital in time deposits to ensure returns. At the same time, when the downturn hits, we don't stop investing as much money as we can every month. And if we've calculated correctly, we might even find ourselves in the fortunate position to buy the dip, as they say in my village. That's why I recommend locking these funds into 3-month term deposits to increase the chances of having them available at the right, in our opinion, moment. Of course, we shouldn't forget about the D account from Freedom24, which offers a guaranteed annual interest rate of 2.5% for euros and 3% for dollars and doesn't tie up our money at all. It's also an excellent choice. In summary, markets will always have fluctuations. Drops will always come. If we believe we've identified a drop coming, we can transfer part of our investment capital to term deposits or high yield like D accounts, Freedom24. And when the drop finally hits, we don't stop buying on the dips. And when they ask us how we remain so calm while the world is burning, we can show them this channel. As always, if my videos have helped you to get your finances in order and you want to start investing successfully, you can create your investment account through the links you will find in the description. This way you are sure that you are using a reliable platform and actively supporting this channel for free. Thank you so much for watching this video. I hope it helped, and I'll see you in the next one.